Tesla's trading below 160. FSD is 99 a month, 10% layoffs, and the market's trading at fear. Let's get into what else is going on this week. What's going on, everyone? Welcome back for another Tesla rant video. This week, we're going to cover the news that happened in the past couple of days. Tesla lays off 10% of their workforce. FSD is 99 a month, and then Tesla just trading below 160 a share. So this 160 level, if we go to the daily time frame, was quite a significant zone for us to break. The reason being, we had a strong 5% or $10 sell-off yesterday because Tesla laid off 10% of its global electric vehicle workforce, 10% of that 140,000 workers, 14,000 workers, plus they also laid off two of their executives, one of them being Drew Baglino, and then another one that works on the CTO side. Not everything is doom and gloom with the company right now, though. We just got FSD moved down from $199 a month to $99 a month on both the basic and enhanced autopilot. I'm expecting these to change after beta is through, but $99 a month after 2.2 million Tesla users just got access for a month. They probably drove with FSD 12.3.4. They said, oh my God, this is amazing. I can't go without this. And they just did a 50% slice in the price. I'm going to buy that right now. $99 a month, that's not too bad. So with those 2.2 million users, they're expecting about a 60 to 75% take rate. I'll put that right in the middle at 70%. That will be 1.3 million Tesla users that will have access to FSD at $99 a month. That equates to $128 million revenue per month, or $1.5 trillion in revenue per year. Now, the profit from FSD is expected to be anywhere from 40 to 50% of the total revenue. So with the revenue being $1.5 billion annually, that equates to about $700 to $740 million in profit for the company. The next thing to touch upon here is Elon changing his Twitter profile picture. Just briefly last night, he changed it from his typical spaceman outfit to auto on Elon or auto on me. That is a nod towards, and as you just said right here, just a nod towards our future AI overlords. This is another hint towards the FSD Robotaxi capabilities. And we also got other news this week regarding the layoffs. Along with the layoffs, the 10% layoffs, we got news that the $25,000 compact car is continued in production. That means that the car is going to launch on that August 8th date that Elon gave last week. The expectations from that car is no steering wheel, no gas pedal, no brake. You simply get in the car, you open the Tesla app on your phone, you say, hey, I want to go to work, I want to go home, grocery store, the car will drive you there. You'll sit in the car, do whatever you want for work. You don't need to pay attention to the road. The $25,000 autonomous car, as Elon put it here, that is going to be a huge boost in revenue. Not only that, all the time that people with money are going to get back from being driven to and from wherever they need to go, that's time that's a huge save in time. And the best companies right now are companies that save you time, because time is the most valuable asset that there is. No one owns it. Everyone wants some of it. Lastly, the market is trading at fear right now, which will likely prompt Tesla's price to go lower. We do have earnings next Tuesday, 04/23. Those earnings are expected to miss. I expect them to miss as well. The only thing that could save Tesla from dropping further on that earnings date is most likely anything to do with the Robotaxi. How does Elon handle guidance after the meeting? What does he say about the August 8th launch date of the Robotaxi? Or just the $25,000 compact car? Are they the same thing? We don't know yet because it's not August 8th yet, obviously. Interpretations for the technical analysis on this chart, I would like to see us ultimately come up and retest 160 before making another leg lower. This 160 should act as a gravitational force for Tesla's price action right now. Obviously, we got hit pretty hard from that 180 rejection on the demand zone. Rejected all the way back down, tried bouncing off demand, broke it yesterday, and then gapped down overnight today. I still expect us to at least see 160. Unfortunately, it's looking like I'm going to be in the position for their earnings. So what I'm planning to do is on my TSLA position. I'm going to sell at the money covered calls. TSLA is about $7 a share right now, so I'll sell $7.50 or $8 covered calls. Those should get me about $75 to $50 in premium per contract. And then I will also open one put per 200 shares of TSLL, one put per 100 shares of Tesla. That should hedge me 1-to-1 either way. We go up, I'm hedged. We go down, I'm hedged on Tesla. Preferably, I would like to see the stock go down into earnings so I can realize profit on the hedged puts, use that profit to add more shares, and then by the time we get back up to 160, 165, I can get out at break even if I wanted to. One last little statement for the video. It's easy to look like a fool investing in the short term. Long term, 2 years from now, 3 years from now even, I do expect Tesla to be back at that 1.5, maybe $1.8 trillion market cap, which would equate to about 350 to 400 a share on the current valuation. It's easy to kind of get sucked up in the short-term bias of downside, but remember, when you're investing in shares like this, when you're investing in a company that you're looking for growth over years, it's easy for you to get sucked into the short-term bias. You get emotional, you get upset about your position. If you're owning shares on that asset and that thing is just plummeting like Tesla right now, you should be happy that you're getting the advantage, or you're getting the chance to dollar cost average down into that position, versus you added 200 of the 1,000 shares that you wanted to of Tesla, and by the time you get around to adding those 800 shares, Tesla's at a pivot high, you missed out, you buy it at the top, and then you catch the cycle down. You want to be a buyer down here simply because of the fear associated with the stock right now, and then you also want to be a buyer because by the time people catch on and the stock does start to pivot, it starts to get some bullish momentum, you're going to be 10 times better off than you were a couple weeks ago when you were all upset because, hey, the stock's just printing red candle after red candle. I can't take it anymore. Go for a walk, go outside, get some fresh air. Your shares are going to be there tomorrow. Your shares are going to be there next week. Your shares are going to be there next month. You don't need to worry about shares that you're holding because they don't expire ever, unless the company does go to zero, in which case Elon would probably be the biggest fraud on the planet, but I don't see that happening anytime soon. That will conclude it for this week. Hopefully next time I make a video, we'll be back up at that 160 and 165 range. Again, we do have earnings next Tuesday, which is going to be a major catalyst for the downside, or possibly a major catalyst for the upside if the Robotaxi hype is true. And if Elon hypes it up enough, maybe investors will start to switch from bearish to bullish mindset. Anyway, thanks for watching the video. Make sure you drop a like and subscribe below. If you have a comment on the video for criticism, you think the video could be better in some way, drop that below in the comments as well. Thank you all for watching, and I'll see you next time. Peace.